Hello and welcome to another weekly Outlook video. I'm going to go through the calendar for next week and have a look at news releases and what I'm going to be trading. Okay, Monday there's a couple of releases out, one on the CAD, the RV PMI and the NZIER business confidence on the New Zealand dollar. We're already in the New Zealand dollar for a sell against the US dollar, which is a much stronger currency at the moment. And we'll just have a quick look at that chart. Okay, you can see we took the sell position. We did take one a little bit higher up, but we took one round about where the price is at the moment. It did go against us quite a bit, but we're looking at this as a long-term position. Once it makes a new low, then we'll be able to lock that position in. The Prime Minister of New Zealand did state that the Goldilocks price for the New Zealand dollar was 65. At the moment it's 77, so it's got over 1,000 pips to fall before it reaches that Goldilocks price. Obviously it's not going to happen overnight, but I'm going to hold this sell position in the long term. Okay, that's the way I'm just looking at that trade at the moment. So any data that comes out, just looking to keep an eye on it on the New Zealand dollar, just to see if our position, if the fundamentals change at all on that position. But at the moment we're holding that quite tight. Not really looking to trade the Canadian at the moment. The data is expected to come out slightly higher on Monday. So all that might cause is a bit of a pullback off this strong US dollar data that we had last week and the non-farm payrolls. We might get a pullback on that trend. So looking to possibly enter that on that pullback to 11,169. Okay, so that would be my entry price for the US dollar Canadian if that data comes out slightly weaker. Okay, so as for Monday, this is where things really start to ramp up a little bit. We've got the Japanese yen monetary policy statement. Okay, don't expect this to change too much, but what I am looking for is for that tone to remain the same for the Japanese yen. The Governor Kuroda has said that he is not bothered about the weakening currency against the US dollar, which is good news, which means this could fall, the yen could fall against the US dollar quite a little bit further. So if we take it to a weekly chart, you can see, or even sorry, the monthly chart, you can see that we're just coming up, we're still below higher prices from back before the recession times, but we are actually coming back into that trading range now. Okay, so I wouldn't be surprised to see some consolidation, but we're talking about long-term consolidation here between sort of 12440 and the 10,000 level. So obviously there's a lot of scope there for profit in between those. So using the 4-hour chart, taking pullback positions and looking for entries for buys at the moment until we start to reach that top of that range, and then possibly looking for sell positions off the top. But at the moment I'll be looking to sort of enter as it pulls back to this sort of area of support and resistance around about the 108.94 area. Okay. As far as the fundamentals are concerned, again, just going to keep an eye on the monetary policy, just see if it changes. If it changes, obviously it's going to cause a much bigger pullback. But at the moment, until we know more, which we will do on Tuesday, then I expect it still to keep rallying this US dollar yen. Okay, moving forward onto 4:30 AM, we've got the Aussie dollar cash rate and the RBA rate statement. Okay, Aussie dollar been in focus recently, under pressure from commodities, especially iron ore. Prices been extremely cheap, and obviously manufacturing in China region has been weighing heavily on the Aussie, and also the troubles in Hong Kong as well at the moment have got to be weighing on this economy as well. Okay, half the business sector closed down in Hong Kong due to protests is going to have a direct effect on its major export country and import country, Australia. Okay, so what we're looking at. Well, there has been bids toted on Forex Talk at 8,620. Now, yes, this could well bounce off of that price, 8,620. I don't expect it to be long term. I expect it to be a short term region. I don't think we've finished falling on the Aussie yet. But again, this is going to be dependent on data from the RBA at 4:30. If they come out with a hawkish tone, then we could well see this Aussie start to rally back up to the 9,000 and even the 9,500. However, apart from retail sales that we had out last week, the data hasn't been that brilliant on the Aussie dollar. And with this weighing Chinese economy on it, I do think it's probably going to reach down to about 8.5 over the coming couple of weeks. before we start to see any sort of reprieve. But again, like I say, this RBA rate statement is key to the fundamentals of where this currency is going to go in the near term. So if we get a neutral to dovish tone from the RBA, then yes, I certainly think this will fall further. If we start to get a turnaround, more of a hawkish tone, which they might surprise us with, then we will certainly start to see this come up. But the key thing to look out for here is whether the RBA are still talking the currency down. They've been talking it down, saying it's too high, it's too strong. Let's hear if they say that again. If they say that again, then yes, we've definitely got more scope to fall. But if they miss that out of their conversation, then I would suggest that we have got some room to breathe and maybe some room for this Aussie dollar to pull back up. Okay, so that is Tuesday. We've got the BOJ press conference as well. Again, same sort of thing. We'll just be listening out for that. Coming on to the pound at 9:30, we've got manufacturing production PMI. Now, in my opinion, the pound is way too low at the moment, but it's caused by this strengthening US dollar. And unfortunately, the sentiment is strong for the sell. All we can hope for now is better data on the UK. We've got an important week on the UK. We've got the MPC rate statement on Thursday, but obviously before that we've got the FOMC meeting as well. So it's going to be quite hard to hold on to buy positions on this pound at the moment. However, I do expect it to turn around. I do expect it to turn around eventually, but the problem is how far it was going to fall before it does. We need to hear some hawkish tones from the MPC to keep this supported, and we need to start seeing some decent data. Manufacturing production month on month is coming out expected at 0.2 from 0.3, which is a further drop. The construction PMI dropped last week, but we did have some reprieve on some of the data. All we can hope for now is a technical pullback on this pound, but I'm not going to be taking any more buy positions for now. Okay, I'm not going to be looking at it as a bullish trend against the US dollar. The best way to trade this currency at the moment is to trade the pound off of weak currencies, the pound euro, pound yen, currencies like that at the moment. Okay, so for at the moment, I'll just stay out of the pound until we get some more from the MPC. Okay, so Canadian dollar on the same day. We've got building permits month on month. Again, just going to be looking for opportunities for the pullback on the US dollar Canadian. Looking to get in on the pullbacks around about that 109.29 level. Sorry, around about the 11101 level. Okay, so looking around about 11,000 for pullbacks. Any good data and any sort of shiners from US data next week could give us that opportunity. There's not much out on the US dollar on Monday or Tuesday. Just a few bits of tier 2 data coming out on Tuesday afternoon. So we may well get a reprieve on some of these currencies that are trading against the US. But again, we have got that FOMC meeting at 7 p.m. on Wednesday. Nothing seems to have been taken into consideration about the fact that the average weekly earnings had dropped off on this non-farm payroll, even though more buy positions and the unemployment rate had dropped spot 2%. Nobody seems to pick up on the fact that obviously these jobs that are being filled are low-paying jobs. Okay, so whether that's going to come in next week, traders are going to suddenly go, yeah, well, hang on a minute. Maybe these jobs aren't of such good quality as what they could be, and we might get a bit of a reprieve on this US dollar strength and a little bit of a pullback. Okay, so just be aware of that. So, like, even though 243 pips seems a massive drop to consider before getting into a trade, it could happen, and it could happen very quickly. It happened the week before. It happened back in April. We had that huge drop on the Canadian due to some bad weather in the US. Just suddenly hit the US, and also traders believing that it was time the BOC put up the rate hikes. So these things can happen very quickly. Also, the top there developing a double top pattern as well. So be aware of that on the technical side of things. Okay, moving forward to Wednesday really is the next alert, and that is the FOMC meeting in minutes. Again, very strong US dollar at the moment. Everybody ramping it up. Everybody hyping it up. Is it going to have a pullback? The answer is eventually yes, of course it will. Everything that goes up has got to come down at some point. It did start to have a bit of a pullback on some of these currency pairs. For instance, the Aussie dollar, the New Zealand dollar, when there was good news out on commodities. It didn't take a lot, but obviously it did strengthen again off of that non-farm payroll. So it's all going to be on the FOMC on Wednesday to see what sort of tone they come out at, to see where this currency is going to go in the future. The US dollar index is very high at the moment as well. Could warrant a sell-off, especially with the lack of tier 1 data coming out at the beginning of the week. We could well see a sell-off on the US dollar in the short term. Okay, but keep an eye out on the FOMC on Wednesday. Employment rate and employment change on Aussie dollar on Thursday. Now this is expected to come in at 6.2%, dropped to 6.1% last time, but everybody criticised this drop in the unemployment rate due to being poor jobs. Expected to raise up again to 6.2. Now, if this stays at 6.1, then it's going to silence those critics on that number, and we could see a reprieve on the Aussie dollar. However, if it does come at 6.2, then I'm sure we're going to see a further drop. In the RBA did say that employment would take a long time to fall, the unemployment rate. So it was quite surprising that it dropped off on the last month's figure. So I wouldn't be surprised if it pulls back to 6.2 at all. Okay, but not really looking. Again, it's going to be dependent on that RBA rate statement to whether we're going to be looking to trade that Aussie dollar on the Thursday or not. Pound on Thursday, we've got the asset purchase facility, official bank rate, and MPC rate statement. Again, this pound being really weighed upon at the moment by this US dollar, the strength in the US dollar. Although the last MPC rate statement, the vote came out split. Okay, it was still 7-2 with 2 people wanting to raise interest rates higher. We then had Mark Carney saying that he wouldn't wait for wage growth to raise interest rates. We've got house prices increasing. They need to control it. They need to keep that steady economy. If they can find other ways to do it without having to raise interest rates, then I'm sure they will do that. They've also stated that they'll only raise interest rates at very medium to slow pace, around about 25 basis points each time, whereas the US are looking to raise theirs at 1.25% each time they raise them, much quicker, much faster. That's going to have an effect on that currency pair of the pound US dollar, and like I say, it's going to be hard to get this direction until we get that MPC rate statement. The official bank rate I don't expect to change, and the asset purchase facility I don't expect to change as well at this present time. But what we want to hear is we want to hear some hawkish comments. We want to get this pound back above this 16,000 level. If it doesn't get back above the 16,000 level, we are in danger of it finding support around the 15,000, which is way back to sort of real recovery times back in 2009. Okay, so we've got to get off that level. I'm not saying we're going to get back up to 17,000. I don't think we will. I think we're probably going to find a mid-range price around about 16.5, which I'm quite happy with. I'd be quite comfortable with that price. But at the moment, it's just we're in the danger zone. We've got to get above that 16,000 price. Okay, moving on to Friday. Not a lot out on Friday apart from the Canadian dollar. We've got the unemployment rate still at 7%. Not expecting that to change much. And we've got the unemployment change as well. Not expecting that to change much from the last time. So again, it will just be a case of looking for US data to strengthen, for the CAD to strengthen, or looking for those CAD pullbacks to get back in for buyers on the US dollar Canadian. Okay, so thanks for watching, and I hope you can make some pips off of this. Don't forget, keep an eye on what's going on the calendar, and hopefully together we can make some money in the live room.